Okay, Aaron, does this new study of the Bangko Sentral surprise you in terms of the property space, especially since we were hoping that residentials would actually save the day here, compared to commercial real estate, for example, with people risk averse putting their money into things that, are technical or usually more defensive sectors. What is going on here?
Actually, the residential portion of the property sector has been very resilient, even in the face of the COVID crisis. Now, I think what we are just seeing now is normalization of that demand. And as we know, as the COVID crisis somehow lessens, no, I hope, no, the shift might be coming to the prospects, no, of commercial leasing moving forward. So I think the study of the BSP is just reflecting the normalization, especially on the residential portion of the property sector.
Okay, and this, Aaron, even as we come off of a very low base year in 2020, that means, it's far from a recovery. Can you say that it's going to take really a long time because we're still from a low base year, contracting even more than how we did last year?
Yes, definitely. No, again, for now, the income picture would still play a role. No, especially for the demand side in the property sector. As we know, well, while we have experienced some easing, no, in restrictions, and maybe some income sources have come up to be, well, not as negative as before. No, but definitely the income prospects moving forward might not be as normal as we want it to be. Thus, might be affecting those discretionary purchases, no, especially for properties.
Are we seeing all of these risks already priced in with one of the worst hit sectors, especially the biggest developers here, which have been undervalued according to a lot of analysts? Can you already say that this is the lowest they can go?
As far as demand is concerned, I hope, I hope this could be the bottom of it. No, but again, as for my view about the market, no, and about the property sector or interest sensitive sectors in general, no, what I see in the trend of interest rates, especially with the 10-year yield in the U.S., it might be having some pressure to go higher. No, if we when we check the chart of the 10-year U.S. yield, we can see some very familiar bullish reversal pattern, no, which means the market, actually the 10-year yield can actually break the recent high and might revisit around 2.5 to 3% moving forward. So if going beyond the property sector and expanding the scope to interest rate sensitive sectors moving forward, then I think there could be some pressure at the very least, no, for those industries.
Okay, well, we're at the interest rate story here. Your reaction to the Bangko Sentral keeping our rates at record lows, while of course you've got the Fed, slowly at least saying that they will start unwinding here. Is there going to be a flight from capital if we keep our rates quite low, especially since inflation is going up pa rin?
Yes. Well, as we know, no, the mandate of the Bangko Sentral is twinfold, no, twofold, no, for growth and for controlling inflation. As of now, I think, no, even if with the threat of higher inflation and even in the face of reducing or risk of reducing the interest rate differential with that of the U.S., I think the market or the policymakers, the BSP, is putting some more weight on the growth. No? As we know, we have just come from a slump, and maybe they don't want to stifle that momentum if there is some momentum going higher, no, by increasing the rates. So, which I think is also the premise of policymakers, not just in the Philippines but also in other economies, no, especially the U.S. No, but in the U.S. they have instituted a lot of bond buying, no. They have instituted a lot of pump priming aside from the interest rate channel. That's why they somehow have that need, not to really unwind, no, those previous efforts. No, but as far as the interest rate is concerned, at least the policy rates in both economies are concerned. The signaling of the policymakers is that they're putting more importance, no, or at least relative importance to the growth of the economy rather than controlling the inflation moving forward. Again, but however, no, the concern is not really the policy rate, no, but the market rate hinting some pressures, no, to be higher moving forward. So maybe the policy rate now is being made accommodative, no, to the needs of the economy. But then again, through time, when we see the secondary rates going higher, then the pressure could be on the policymakers to follow through.